boom, how's it going? How's it going? You are going to be amazed with the guy that I've got today. And Khanya Ngonyama, that's his name. And Khanya has been around. He started investing back in the days in 2013. And we talk about property. So obviously he is a property investor. And out of that, he's got a special something that I didn't even know. The strategy that he is utilizing, where he's partnering up with the government to actually put in more residential properties on the market whilst he's getting 55% back of his money. That's what I call investing, or should I say clever investing. Watch out. How's it going? Welcome aboard. It is I, your boy again, and today I've got a guest, and I've got Khanya Ngonyama, who is in the house. And Khanya, he is a property entrepreneur, and he's also an investor, and I am privileged to be hanging out with him today. Khanya, how's it going?
I'm fine, TJ. Glad to be here. Thank you.
Awesome stuff. Awesome stuff. Khanya, you are in the property space, and how long, and like, what is your story? How did you get into property?
Okay, my man. So basically, my background is I'm a water and environmental scientist.
Right.
Yes, I grew up in the Eastern Cape, the small town of King Williamstown, but I first developed a passion for environmental matters. Hence, then I studied the water and environmental science. Yes, but then later on, after finishing off at varsity and working for an environmental company, I then realized that I need to consider other forms of income besides just my salary. Hence, then I started then just attending property seminars. And I realized that property is the real way to financial freedom.
What do you mean, Kanye, when you're talking about financial freedom? You know, a lot of people don't understand this concept of financial freedom. But in your view, when you look at it, what does that talk to when you say financial freedom?
Yes. Okay, so to me, financial freedom talks to whereby you are in a position of being firstly debt-free, and also being in a position whereby you are not just relying on one source of income, and because basically you can besides your salary, you've got other streams of income that are coming into your life, and you also are free to do what you want to do when you want to do it.
All right, that's good. So when you started, Khanya, I'm sure you, when anyone else is starting a new thing, basically we all have problems, and some of our problems are here in our head, and some, you know, it's physically. When you started off, I mean, this was not something that you do every day, because you coming in from a small town, and you know, you've gone to university, they didn't teach you how to do the property thing. It's something that was out of from the heart, right? What were some of the stumbling blocks that you realized or that you had in your starting off the journey?
Okay, so when I was starting off, I realized that one of the stumbling blocks was firstly to not have a good enough credit record, or in fact to not even have an existing credit record, because I was attending the property seminars, and then I said to myself, I must implement. Then when I came across my first opportunity, and I tried applying for a bond, I was told that I don't have a credit record, which then surprised me, because I was quite an aggressive saver. I always tried to stay away from debt. So I realized that I need to start now building a credit record by which can be done by taking out simple things such as a credit card or a telephone account. And then from then onwards, I was then quite focused on building the credit record to make sure that I will look favorable to the banks.
You touch on something that's pretty important here, Khanya, because I think people, what I've seen is that they lose track of one or the other. So they go aggressively on the debt and they get into a rabbit hole, or they go aggressively on the saving part, but they don't have debt. And,
yes.
and it sounds like, you know, when you were starting off, that was your predicament there. You saved
yes.
up quite a bit, but now when you're wanting to buy something, they said, well, they can't give you anything.
Yes.
And with my knowledge, diving in a little bit deeper around credit reports and things like that, if you don't have any form of debt, right, like what you said, of opening up a small credit card, it might be 5,000, but it already counts up, right?
Yes.
But if you don't have anything in your name, even if you're banking in 100,000 a month,
yes,
you're as good as a bad credit holder, because nobody knows the way you behave, isn't it?
That is correct. When I was going through this journey of building the credit record, yeah. I realized that how the banks work is that even if you are an aggressive saver and you may have lots of savings, but they need to know that once they borrow you money, you need to have some track record of how you will handle that money. So and also I learned about the concept of good debt and bad debt, whereby instead of just only focusing on like your consumer debts, like your personal loans and credit cards, the home loans are considered as good debt because it's debt that you are using to build wealth.
All right, I like that. I like that. And I want to speak to you, Khanya, because there you are, you're coming from a small town, right? And you have figured out that you can do these things. And on the other hand, you're also having a lot of savings now that you have. And I am sure there are plenty of businesses out there that you could have done, but you chose property. And my question is, why didn't you choose to go and open up? I always give the example of my spaza. So why didn't you go and open a spaza versus now doing property or any other form of business that it could be? I mean, you are highly qualified in things of the environment. Why didn't you start a consulting firm for environmental issues? There's plenty of them right now in the world. So I'm sure you could have done better there. But you chose property, and the question is why?
Yes. My name. So when I was attending the property seminars, at the same time, I was also attending seminars to do with the forex trading and with share trading. In other words, trading shares on the stock market. Right. But what I realized was that with property, out of all the asset classes, it was the one that would be like able to provide one with a steady monthly income, one where you have full control over. Because I mean, think about the forex markets, whereby if you are trading different currencies, you don't really have control over how those currencies perform. But with property, yes, it is also affected by economic fundamentals, but the impact on property is not as immediate as you see in the financial markets. So property is a more steady form of investment. It is the most safest asset class when one wants to build a steady monthly income. Yes.
So you're very right. I never went to school actually for any form of trading, but I was introduced at one point. I had a very good friend of mine that I used to work with, and he used to do forex trading online quite a lot. So I got intrigued because I would just see him looking on his phone all the time. And
Yes.
so at one point I looked at his phone and all I could see, was, and I said to him,
Graphs.
yeah, what are you doing? I mean, at that time, I didn't even know that they were called graphs, So I asked, what is that? And he says, no, I just made $20 or something like that. When I came into the office, and up until now, I just made $20. I'm like, you made $20 from what? Doing what? And he showed me, and I started learning from him, getting tips from him. But I lost a good 50,000 in a space of 6 months, I think. But obviously, I was not educated, and I mean, there's other people out there that could tell me that, TJ, with your 50,000, we could have made you millions. I don't know. But you and me, it looks like we are on the same path, which is property. So that's great. But what do you specialize in the property space? Your investments, what do you do? There's many forms of property investments. There's Airbnb, student accommodation. What's your thing?
Okay. So at the current moment, I'm building a buy-to-let portfolio, whereby most of it was properties which were bought off-plan. In other words, new developments.
Right.
Because I learned about also a tax incentive, a certain tax incentive called the Section-13SEX tax incentive, whereby if one buys new properties in new developments, and at least you have a minimum of 5 of them, then you can actually claim from SARS. In other words, SARS can actually be like your partner in building your portfolio, because the money that you spend on those new properties, you are basically being rewarded by government to say, thank you for helping us to reduce the housing backlog. And also at the same time, you can use the money that you get from those claims from SARS to put back into your portfolio. So at the moment, I'm focusing on a buy-to-let portfolio, and most of the properties are currently in the East Rand in Boksburg, because with my research, I found that the Boksburg, Kempton Park areas, they are quite good in terms of the rental demands. I mean, being close to OR Tambo Airport, and that can also then factor in the Airbnb market. Let's say maybe you've got a tenant who's no longer in your renting from your property, and you've got a vacant property. While you are looking for a new tenant, you can actually just list your property on Airbnb, and because being close to the airport, it means that you are more likely to get people who want to stay close to the airport.
I like that strategy, but I want to come back to your buying strategy, because, I mean, we've been doing this podcast now, we're going in 2 years, and there is no one that has ever come through here that has said to me, TJ, this is my strategy, I buy new developments. So let's walk that through step by step, Kanye. How are you buying them? Do you buy them in your personal name in a company, and then thereafter explain to us this concept here of working with SARS as your partner?
Yes. So the first property that I bought, well, I bought it in my personal name.
Right.
Because yes, I was a member of a certain investment club called the P3 Investment Club.
Right.
Because what they did is they would actually be encouraging people to invest in property. They'll be telling us that property is the ultimate retirement plan. Much so that
how long back was this?
This was back in 2013, when I was still working as an environmental scientist.
Sure. Right.
Yes.
Right.
So they will be the guys at the P3 Investment Club. They will be even going as far as telling us that, guys, ditch your pension funds, ditch your retirement equities, your retirement annuities. And some of us will be a bit shocked. Why would you be encouraging us to ditch such investments? Because they will be always just preaching the message that property is the ultimate retirement plan.
Right.
So the first property then, because what they did is on a weekly basis, they would be sending out emails showing everyone who is a member any new developments or new properties which are on the market. So that's when I bought my first property, which was a 1-bedroom, 1-bathroom unit in Pretoria North. Yes. And then after that, I then learned that the most cost-effective and maybe also tax-efficient way to build a portfolio is to build it in a company. So then I started then buying all the other properties up to now in a company.
You've been at it now from 2013 up until now, and this is your strategy
Yes.
that you're utilizing, and you're buying new developments. How many now have you bought? Okay.
So after that first one, which was in my name, I've now bought about the rest of them in a company,
right?
PTY Limited company, yes. Because even after buying that first one, there was one which I also bought in my name, but then I transferred it also then into a company. So I've got 7 in a company, 1 in my personal name. Because one of the advice that I got was that when you are claiming from SARS using that Section-13SEX tax incentive, it will be more efficient when you are doing it in a company.
So how does it work now? So now you've bought these properties, and we've just spoken about the acquisition part, right? You bought them now. Now you have them, and how do you then? I mean, what does the tax incentive? What does it do? No, not what does it do. What does it dictate? And how do you claim back? So give us examples here of, let's assume all of these properties, you bought them for 500 each. So now you've got about 7 of them now. And give us an example now. Just walk us through how is it going to work up until to a time where SARS becomes your partner.
Okay. So how it works is that you must first have a minimum of 5 properties that you bought new. Yes, in other words, off plan.
Right.
And you don't have to buy them all at the same time. You could buy one a year, and then on the 5th year, when you now can confirm that you now have bought your 5th property off plan, then you can work. I always advise people to work with an accountant that specializes in property, not just any accountant. So now, then you can work with your accountant, whereby you can then claim from SARS about 55% of each of these properties. So let's say now you bought the properties for each of them for 500,000. Then over a 20-year period, you can literally claim 55% back from SARS of the cost of acquiring each of these properties. Yes. So in other words, you can't do it all at the same time. You need to do it, I think, over a 20-year period. So at the moment, because the 5th property was acquired in 2017, so I'm still now in the process of actually now claiming back some of their capital and using it, of course, to plow back into the portfolio.
But now, Kanye, I want to ask you this question. I think this is where it gets exciting when I was reading about this. And that, by the way, I haven't done this before. So I'm actually glad that I'm speaking to someone else that has done this.
Yes, no.
When you're talking about you're claiming back, the reality of you here of buying the new development is that your exposure or your risk was you going to the bank with your salary to buy these properties, but potentially you didn't put in any of your own hard cash, maybe on transfers or maybe, I don't know. But
yes.
Give us an example there, maybe, because where I'm thinking here, Kanye, is you used 100% of the bank's money, potentially.
Yes.
And now you're going to be claiming 50% of it, and that 50% is coming back to you
Yes.
in your pocket, right?
Yes.
And this was not your money in the beginning to start off with.
That is correct. Yes.
And
Because I spent the money on transfer fees, and also obviously with properties which are below 1 million or even 750K, there was no transfer duty, just only the transfer and legal fees.
so you're getting 50% back, and is this 50% of the entire cost purchasing price? So you're buying at 750 here, so plus your closing fees, let's throw in another 50,000. So you're now buying at 800, right? Are we talking about the 50%? That's what you're going to get as a discount, or we're talking about 800? You're going to get a 50% discount for the entire 20 years.
Yes. So basically, what you can do is that the 55% of the purchase price, you can claim it back over the 20-year period. So in other words, let's say 55% is like 360K.
Yeah.
You can basically claim that back over the 20-year period, because it also works on the assumption that over that 20-year period, you would have then paid back your bond to the bank. Yes.
So not only do you get the benefit of the tax incentives here, the J13, that's number one. So you get a 55% back. Yeah?
Yes.
Number two, your property, you are buying it in a complex, so if it's well maintained, there's going to be appreciation on that property as well.
That is correct. Yes.
So that's another benefit. And you've got a tenant that is in that property that's paying off your debt.
Yes.
And if it's in a good neighborhood, potentially you could be breaking even, but new developments generally, they don't cash flow. But I mean, you can tell me, you've got 7 of them, so I don't know whether they cash flow or not.
Okay, so then myself, when I started off buying off land, I was also then worried that with new developments, there might be the risk of them not being cash flow positive. So now, what I then started doing was just working with rental agents, rental management agents, to find me tenants who would be willing to obviously pay at a certain rental amount, so that the properties would at least be cash flow positive. If not maybe in the first year, at least from the second year onwards. But with most of them, they were cash flow positive from the first year. Because what I would do is I would tell the rental management agent to advertise at a certain amount, after, of course, taking into account all the expenses, your bond repayment, your levies, your rates and taxes, and potentially also insurance.
Right, I like that. Now, Khanya, I like this business model of yours. But it's a pretty long, very long term. 20 years, that's a long time. And
yes,
unfortunately, I don't see a lot of people, not a lot of people, but I don't see many people comprehending that long frame, you know, like this is like 20 years. So can I do this? And I think this is why I think this particular model is not common amongst you know, people, but I like it. It's 55% of your buying cost. That's heavy.
yes, my brother.
Well done.
And also, thanks, man. Also, in situations where you buy the properties cash, I mean, even if you get like an angel investor and you buy the properties cash, then you can actually realize this tax incentive almost like immediately. If, of course, you buy your 5 properties within a space of like 2 to 3 years, then you can actually realize it almost immediately. Yes.
Okay. I think, you know, the great book always speaks about people dying because of lack of knowledge. And This is it, exactly. You know, if we don't know, if we don't have the knowledge, then you can't participate in such kind of things. So well done there. With your journey so far, what have been some of the benefits that you started realizing, having to play in this property space? And it looks like you're pretty active, and besides being active, you're progressing. You know, you're doing things. And what are the benefits now? You know, when you look back, when you're starting off, and you look at where you are now, you're like, I didn't know this benefit, but now you're realizing these benefits. What would that be?
Yes, madam. So the first benefit that I realized is that now with my income having basically been boosted by the portfolio, whereby a few of the properties, the bonds have been paid off, meaning therefore that each month I get extra income, whereby when the money, the rental income goes into the business, then from the business, I pay myself a salary, even though of course it won't be a salary as high as my salary as a water science supplements my monthly income.
Right.
So that will be the first benefit. Yes.
Good.
And then the other benefit is that in my property journey, I've also been able to now network with more like-minded individuals. I mean, you yourself, you will know the SAPIN community, the South African Property Investors Network. I've met some great individuals there, whereby I've been able to learn new strategies of how you can make the most of your property portfolio, and also learn new business models. So besides the financial benefits, there's also then, yes, the networking side of things, because obviously,
social
as they
part,
say,
yeah.
your net worth, your net worth can also be determined by your network.
Awesome stuff. Kanye, if you look back, right, what would be the one thing that you will say you probably underestimated before you started property, and that thing now is a key thing?
Yes. Okay, I would say that I possibly underestimated the cost of managing a rental property. For example, things such as your maintenance costs, especially if you buy in a complex that might not be well managed. So I underestimated the importance of making sure that you buy in a complex that is in a body corporate, which is well managed financially, and of course also maintenance wise. So much so that I've realized that it might also be a good idea for one to try to be on the body corporate committee, so that you are active and you always make sure that the complex that you've invested in is well managed. Yes.
Awesome stuff.
Yes, some guys might think that, okay, being a member of a body corporate is a thankless job because there is no salary, but at least you are making sure that your investment is well protected.
I don't buy anymore in complexes. It's not my thing. But when I was starting off, I used to buy there, and I used to have the same thinking. Why have an investment and have someone else manage it for you when you can have that opportunity to also contribute to it? So respect to that. Well done, Kanye, on that. I want to jump into the last section of the segment of the podcast here, and we want to talk about, just to know you a little bit more, what is your favorite business book?
Okay, so my favorite business book is a book by the American author, Robert Allen. Not the other Robert Kiyosaki.
Not my Robert.
Yes. So Robert Allen, he wrote a book called Multiple Streams of Income.
Right.
Because just the title of the book itself explains what the book is about, because what he says is every year on an annual basis, you can actually have a goal of starting a new stream of income. So maybe Yeah, this year you obviously you buy a new rental property. Next year you can look at something like affiliate marketing, etc., etc. The following year you can look at investing in a franchise. Yes, and then the other book that I also liked is a book called Crushing It by Gary V.
Yeah.
Yes, where he also then teaches us that in order for one to obviously have a good cash flow as an entrepreneur, you must really focus a lot on your digital marketing, digital advertising, and also to try and always look for new ways of having income streams.
If we are to go back in your younger self, maybe 20 years from now, what advice would you give your younger self?
Okay, I would tell myself that start with property as soon as possible. I mean, even if you don't have the capital, but try and start with educating yourself by obviously reading books as soon as possible, whether you are in high school or at varsity, and attend property seminars, because then the sooner you can start to educate yourself and get yourself mentally ready to get to plunge into the property game, the better you'll be prepared. Even if it means that you can learn from someone who's already doing it, like an existing property investor who can maybe be your mentor. Yes, and also maybe I would advise myself to also build up my credit record as soon as possible. I mean, as a student, you may not qualify for a credit card, but you might qualify for a telephone account. So you can start off by opening a telephone account to build your credit record.
Awesome stuff. Those are good nuggets there. Khanya, what do you think separates those that are successful, and especially in this space where we're in property, yeah, from those that are not?
Yes, no, okay. Firstly, I would say that those who are successful are those who are always willing to learn from others. Besides just obviously reading like your business books, they also are willing to learn new ways of doing business from more experienced investors. In other words, they don't just only focus on just one strategy. Yes, they start off with one strategy when they start off on the property game, but they also try and learn from your more experienced investors, new strategies. For example, besides just doing the buy-to-let strategy, they can also look at the short-term rental strategy using platforms such as Airbnb, and they will also be willing to learn about student accommodation from those who are already doing it.
Awesome stuff.
So basically, yeah, it's about they self-educate themselves and they learn from those who are already doing it.
Awesome stuff. My last question to you, Khanya, in our conversation here is, what does success look like to you?
Yes, success to me is like the progressive realization of like your worthy goals, whether they are financial goals or health-related goals, just progressive realization, and then of course to live a lifestyle whereby you can go wherever you want to go when you want to go, because you'll be at a stage whereby your income is able to supplement your lifestyle. Yeah, that's what success needs to be.
Awesome stuff. It's been great hanging out with you, Kanye, and to all the success to you in your property journey. And thanks a lot for having us and blessing our audience here. Thanks a lot and goodbye.